Hello everyone and welcome back to another video. In today's video, we're going to be doing something a little bit different. This is going to be the start of my $1 million portfolio challenge. I actually got this idea from Sven Carlin. He is another YouTuber here, a YouTuber that I actually really respect, and he is doing this $1 million portfolio challenge, and I thought that it was an absolutely awesome idea for me and all of you to learn along with me, essentially. The goal of this portfolio and the goal of this challenge is to create a portfolio that I believe will beat the S&P 500 over the next 3 to 5 years and hopefully over the long run. Now, why I am doing this is because I've spent the last 2 years making a ton of mistakes in the stock market and learning so much. And also, I have been saying here on my channel that I am a long-term optimist and that I am seeing opportunity in this market. So this is a way for me to show you guys that I do believe I am seeing opportunity, and this is a way for me to kind of get a clean slate and use all of the lessons and knowledge that I have gained over the past 2 years to now start a fresh portfolio challenge and see if I can actually beat the market. Another disclaimer here, or another thing that I want to say, is that I own every single stock in this mock portfolio, but my personal portfolio may not be worth $1 million. It may be more or less. Hint, it's a lot less. But yeah, essentially, I own every single stock that I am going to show you guys here in our mock portfolio. My personal portfolio is just a little bit more diversified and a little bit more focused on dividends. I own ETFs in my portfolio and a lot of high yielding dividend stocks, but the purpose of this portfolio that I'm going to be sharing with you guys, again, is solely to beat the S&P 500 and not really focus on dividend income or anything like that. So it's also just a little bit more concentrated in select positions. So this portfolio is going to have less than 20 stocks in it at all times. Right now it has 16 stocks in it. A lot of these stocks I've actually talked about here on my channel before, but a few of them are actually brand new. You guys have never heard about them, and they are smaller cap companies that I personally own that I just never really talked about. There is going to be some new stock picks in this video, and I'm going to explain basically my quick 2-minute thesis on every single stock that is in this mock portfolio. Another quick disclaimer is that this is a fake portfolio. I'm not a millionaire. I don't have $1 million. And yeah, this is just basically how I would be investing $1 million if I had $1 million and was starting a brand new portfolio today. Now, as I said, this portfolio is going to max out at 20 positions. Currently there is 16, but this portfolio is going to remain 100% invested in the market at all times. So basically what that means is if I want to add another position to this portfolio, I'm actually going to have to sell something. I'm going to have to trim a position or cut a position, sell it, and then buy something else. And I'm going to be tracking all of those transactions to see if my portfolio is going to outperform over the S&P 500, including the additions or my trimmings and all of that. So again, this portfolio is going to remain 100% invested. Now, the last disclaimer that I got to make here is that this is not financial advice. This is something that I have been wanting to do on my own. Then Sven did it and I was like, man, it is time to do it. I want to do it as well. This is not real money. This is not my real portfolio. This is basically just a research project for myself that I am going to be sharing with all of you. What I'm also going to be doing is tracking all of these companies' earnings here on my channel. And basically every single time that one of these companies reports earnings, I am going to analyze it, go over it, update you all with my thoughts, and maybe make some adjustments to this portfolio and explain why. This is going to be a really fun project, I think, and maybe I'll do like a monthly update or something like that, and basically just track how this portfolio is doing versus the S&P 500. Yeah, I really hope you guys enjoy this new kind of video that we're going to be doing here. And now let's just hop right into it. Let's hop into the portfolio, how it's structured, and really what is in it. So the top position here is actually Equitable Bank, with the weighting being nearly 10% of the portfolio. This is a stock that I have been talking about here on my channel for quite some time. I think that this stock is massively undervalued. It is a Canadian small cap bank selling for a price to earnings ratio under 6, and it's growing its earnings at like 15% a year. The company is fantastic. It has incredible insiders, it has incredible management, it has a very high insider ownership. The insiders are not taking on massive stock-based compensation, and what they're doing instead is they are increasing their position and buying millions of dollars more shares in this company while the stock price is low. And while I believe that the stock is cheap, Currently, this stock is paying an over 2% dividend yield as well. The management is expecting to grow the dividend by 20 to 25% annually over the next 5 years. And by 2027, what that means is that the dividend yield on cost of shares today will be over 7%. So I think that this is a very cheap growth stock, but also a dividend growth stock. And over like the next 10 and 20 years, this stock could be yielding me well above 10% a year just in dividends because the dividend is growing so quickly along with the business. The next stock here is Google, and that makes up about 10% of the portfolio as well. Google, I believe, is simply just one of the best companies in the world. It's in this massive correction. It's down about 30% from its all-time highs. I think that the business is only going to continue growing long-term. It's an absolute free cash flow machine. It's got like 10% of the market cap in cash right now. So the enterprise value to free cash flow is like, I believe it's at a 10-year low or something like that. So I think Google is incredibly attractive here. It's one of the best businesses in the world. And I think that it's, from a fundamental and price standpoint, I think that it is looking very attractive here. So that again makes up about 10% of the portfolio. Now, the third largest position is Brookfield Infrastructure. This is another stock that I have been talking about a lot on my channel over the years. In my own personal portfolio, actually, this is a pretty big position, and it's been one of my best positions over time. Brookfield Infrastructure is just an amazing company. They consistently get an ROIC above 10% on their money. The company is a utility company, but it is growing. Like, it grows its FFO, or essentially its cash flow and its revenue, at double-digit growth rates while it's being a utility company, and it's like a boring business. It's not that expensive. It pays a nice dividend. The dividend is growing. It benefits from inflation. And I think that over the long term, this stock is going to continue beating the S&P 500. As I just said, this is a utility company, but over the past decade, this stock has outperformed the S&P 500 quite a bit. I think that the management here is fantastic and that they are going to continue outperforming in the future. Now, the next largest position is Alibaba at 8.6% of this portfolio. I've talked about Alibaba here a lot on my channel. I think that Alibaba is absolutely ridiculously cheap right now. I think that China has this interesting dynamic right now where China's monetary policy is loosening, they're lowering interest rates, and they're stimulating their economy at the same time as the Western world, like the United States, Canada, and Europe, is raising interest rates and tightening monetary policy. So I think that this is going to be a massive additional tailwind for Alibaba's business because, again, China is being loose with their monetary system right now, where the rest of the world is not. I also think that Alibaba is a fantastic company. The management of this company, again, is just fantastic. And Alibaba has the goal of being what they call a great company and a company that lasts for 3 centuries. They essentially want to continue growing the business over the next 100 years. I just think that it's very cheap, and I think that the sentiment towards China and all the fear around China is overblown, which is creating a very awesome long-term opportunity. China's economy is growing. It's probably going to be bigger than the US in the future, and Alibaba is one of the best businesses in China. I also do not subscribe to the thinking that the Chinese government is going to kill Alibaba's business because this business generates so much tax revenue for the Chinese government. So it's not even in their best interest to kill Alibaba, essentially. So I think they're going to let Alibaba continue succeeding long term. I think the West is kind of putting out negative propaganda, honestly. And yeah, that's just my opinion. And that is why Alibaba is 8.6% of their portfolio. The next stock here is Green Thumb Industries. This is a cannabis company. And I know I'm going to get this question. A lot of you are going to be asking me, well, what about Trulieve? Honestly, straight up, I think that with Green Thumb Industries, after the massive sell-off that this stock has experienced, I actually think that this stock is looking more attractive than Trulieve. I didn't used to think this, and I haven't sold my Trulieve shares, you guys, in my own personal portfolio. It's still a large position, but I have been adding Green Thumb Industries because I think that Green Thumb Industries, well, it used to be selling at a premium to Trulieve, but recently this stock has been getting slaughtered and now it sells below Trulieve. I think that the fundamentals of Green Thumb are actually better than Trulieve as well. And I think that this business is a little bit more diversified than Trulieve around the US. And I just think that it's a little bit better of a business. And now it is not selling for that massive premium. So that is why here on my channel, I've been talking about Green Thumb Industries over Trulieve. And that is why I decided to put Green Thumb Industries in this portfolio over TrueLeaf. It's honestly just a fantastic cannabis business. It's generating more operating cash flow than TrueLeaf. And I think that the company has more organic growth ahead of it because of the states that it is in. So yeah, I think that TrueLeaf and Green Thumb are both great businesses, but in terms of risk, reward, and price, I think Green Thumb is actually more attractive right now. So let's move on to the next stock here, and this is HDFC Bank. This is the largest publicly traded bank in India, and this makes up about 8.05% of the portfolio. Here on my channel, I've been talking a lot about India and why I am so bullish on India. I just think that India is going to provide massive amounts of growth over the next few decades. And with this company right here being the largest bank in India, I think they're going to benefit massively from the GDP growth and the rise of the middle class and the revolution, the economic revolution that India is going through. So I think that this is one of the best no-brainer investments for me personally in the Indian economy and to get exposure to all of that growth. So this makes up about 8% of the portfolio. The next stock here is GoEasy. It makes up about 5.76% of the portfolio. This is another small cap financial stock in Canada. The management of this company is absolutely phenomenal. They are large shareholders. They are buying a ton of stock in GoEasy right now while the stock is in a massive correction. I think this business is going to continue growing amazingly well in the future. I just think that it's super cheap. I have a full research document that I've done on GoEasy and why I am buying it. I just think that it's a fantastic little small cap business. And yeah, I'm very happy to have it be about 5.76% of the portfolio. The dividend is also near 4% on this one right now, and the dividend is growing like just ridiculously quickly with the fundamentals of the business. And the management is using the recent massive correction in the share price to buy back a ridiculous amount of shares. So they're returning a ton of cash to shareholders, and I love it. I love to see it. So let's move on. The next position here is Constellation Software, and that makes up about 5% of the portfolio as well. The best way to understand Constellation Software is this is like the Berkshire Hathaway of software companies. Constellation Software is just this massive network of software businesses. And the way that this business grows is they use organic cash flows to buy other businesses and just continue expanding. They get a very nice return on their invested capital. And this company has over 100x'd in the past 20 years. It is probably the most shareholder-friendly business I have ever seen. It is just an incredible business. There is zero stock-based compensation. The main metric that the management focuses on is free cash flow per share, and the shares outstanding have not increased over the past 2 decades. It is just a fantastic business. It's absolutely amazing, and I think this business right here is definitely worth having about 5% of the new portfolio in. Moving on, the next position is Amazon, which makes up about 5% as well. We all know Amazon. I think that Amazon is a great business. I think that Amazon is going to grow its operating cash flow very nicely over the next 5 years as the company refocuses on efficiency. I just think that Amazon is a long-term no-brainer as well. I love the recent correction that the stock is in, and I think that it's a great time to buy Amazon personally. Now, the next position is Berkshire at another about 5% of the portfolio. Berkshire is, the CEO is Warren Buffett. I think this is a fantastic business for the long term. Another long-term no-brainer right here that I think will actually outperform the S&P 500 from today. I'm happy to have Berkshire in this portfolio as well. Now, moving on to Meta. This makes up about, what is that? It makes up about 5% of the portfolio as well. I think Meta is stupid cheap, you guys. I think Meta has so much bearishness towards it. I think the company is going to perform incredibly well over the future. I don't subscribe to this thing where, Meta is just, like, Meta is selling for prices cheaper than utility stocks while seeing like 80% gross margins and growing free cash flow ridiculously well. I think this company is an absolute steal right now. So yeah, it's in the portfolio. Brookfield Asset Management. This is actually the parent company of Brookfield Infrastructure, but the CEO of Brookfield Asset Management is incredible, and Brookfield Asset Management has actually produced more returns over the past 20 years than Berkshire Hathaway. They are like a Berkshire Hathaway. They're slightly different, but they're basically like a Berkshire Hathaway. They're just this massive conglomerate company, and the CEO and just the company here, I think, is absolutely incredible. And I think that it makes a very good addition to the portfolio along with Berkshire, and will probably beat the market over the long term as well. Now, the next stock is Royal Bank of Canada. I think that this is the best bank in Canada, and actually probably one of the best banks in the world and one of the best banks in North America. They get the highest return on equity out of all the major North American banks, even more than JP Morgan. The company is growing incredibly well. It's currently in a dip and it pays a dividend of over 4% right now. And the dividend is going to grow for probably the rest of my lifetime. So I think that this is another long-term no-brainer. And I'm happy to have this one make up about 5% of the portfolio. Now, the next position here is Magnet Forensics. This is a small cap stock that I've never talked about here on my channel, and this makes up about 4% of the portfolio. I'm actually not going to talk about this one too much because what I think would be cool for you guys to do is go and research this stock right here on your own. Go and take a look at it and, try and answer the question as why I may be interested in this stock, what I'm seeing in it, go and take a look at the income statement, the cash flow statement, and the balance sheet, and maybe come to your own conclusion there. And then maybe later on, maybe next week or sometime, I can do an in-depth video on Magnet Forensics and show you guys what I am thinking there. But yeah, if you're interested, go and research this stock on your own, see what you find, and see why I may be interested there. Now, the next stock is Absolute Software. I've actually talked about this one on my channel before. It makes up about 3.3% of the portfolio. I think that this stock is just ridiculously cheap. It's a very nice dividend paying company. It's a smaller cap software company. It's a free cash flow machine, and I just think that it's small caps are cheap in the market right now. I think that this is a great small cap company, pays a dividend, and is growing very nicely. So yeah, I think that it's worth having 3% exposure to that stock. Now, the last stock here is one I've never talked about either. This is Cargojet. Cargojet is an airplane transport company. So they ship things all over the world, but with planes. Okay, they're like an air shipping company essentially. The company has been growing incredibly well. I think that they have fantastic management. They've been outperforming the overall market over the past decade, and I think that they will continue to do so. I think that this is another really great small cap company, and yeah, I think that it was worth putting 3% of the portfolio in this one just because of how strong the fundamentals are. And essentially how cheap it is with its projected growth as well. Those are the stocks currently in the portfolio. That's like my quick thoughts on them. Now, if we take a look at the portfolio already, it is up 3.35% or about $33.3 thousand. Now, if we take a look at the SPY right here, the SPY over the same amount of time is up 2.83% or about $28,000. So this mock portfolio right here is actually outperforming the SPY so far, but you guys don't get excited. It's been about a week, okay? Who knows what's going to happen? I want to be judged over the next 3 to 5 years on this portfolio. That is my own goal, at least. Yes, the portfolio is outperforming, over the past week or something like that, but man, I really don't care. I want to see what happens over the next few years and see if I can manage this money. So let's actually now head over here to the diversification. So this is the percent of the portfolio right here. This is the pie chart of how the portfolio is broken down. I'm not going to go into this too much. I just wanted to show you guys a visual representation of the portfolio. And if you guys want to pause the video and take a look at it for yourself, then please feel free to do so. Now, if we take a look at the different sectors right here, I don't know what happened. I don't know why these aren't labeled. I'll fix the labeling here. Sorry about that. But the different sectors, I believe, well, now I'm going to have to go and take a look, Daniel, you freaking idiot. All right, these sectors is 40% technology, 38.23% financials, 10% utilities, 8% cannabis, and 3% transportation. So that is how these sectors are broken up right here. And again, I'm sorry, I will fix the labeling. Now, the country diversification, this is something interesting. And the country diversification is actually 46% Canada. So this portfolio is mostly exposed to Canadian companies. I am a Canadian, and I think that our markets offer some incredibly attractive stocks that sell for even better prices, honestly. I think that not a lot of people look at the Canadian markets for investments, but a lot of our stocks outperform the SPY, they sell at cheaper valuations, and they have more projected growth. So I think there's a lot of gold in Canada if you know how to find it, and a lot of the stocks in my portfolio here are Canadian. Now, 37.5% of the portfolio is in the US. Those are like Meta, Amazon, Google, etc. Now, 8.5% of the portfolio, I just want to make sure that I'm getting this right. Yeah, 8.6% of the portfolio, is in China. This is just the Alibaba position. And then another 8% of the portfolio is in India, which is the HDB position. So together that makes up about, if you want to round up, that's about 17% of the portfolio is in what I believe are emerging markets and markets that are going to grow very well over the future. And honestly, I would not be surprised if this piece naturally grows into about 20% of the portfolio or more in the future. Yeah, that's the diversification that I'm happy to have. 46% Canada, 37 or 38% if you want to round up US, and then about 16 to 17% emerging markets. And yeah, that's just how I have it all set up. Now, right here, you can also see the cost of all of the shares. And my cost on all of these shares was $994,000 versus the SPY right here, which is $994,000. And again, we can see the performance of both portfolios so far. So yeah, this is my $1 million challenge. I am actually going to share this, and I'm going to put a link in the description if you guys want to come and check out this portfolio. And then also over here on Stock Unlock, I have Daniel Pronk's $1 million challenge, where I have all of these 16 stocks so far and all of my notes. So if you guys are interested, I'll also put a link to this in the description. And for example, if you're interested in Equitable Bank, you can come here and click on all of my notes, and you can also get some additional links here that I have, just my own research. So if you're interested, again, in my Daniel Pronk $1 million challenge portfolio, all of my notes will be here on Stock Unlock, and you guys can come and check that out as well. But that's the portfolio. Let me know what you guys think down in the comment section below. I think that this is going to be a fun little challenge and fun thing for me to track over time. Again, this is not financial advice, and this is a mock paper portfolio on some of the best stocks that I have been able to find in the market and the stocks that I am personally most bullish on over the next decade. So if you like this video, please remember to leave a like on it. If you're new here and you want to follow along with this challenge, then please subscribe, and that's going to wrap up the video today. So thank you guys so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.